Hi, I want to talk to you today about my friends at Bitwise and why they're the best crypto asset manager out there. So many investors I know are working with Bitwise today. They've got more than 20 products to help investors get whatever access they need or want. They've got a team of more than 100 across the US and Europe. They have more than $10 billion in client assets. It's not just the products that show they're all in. They've even supported the ecosystem by donating 10% of their Bitcoin and Ethereum ETF profits to open source developers. And they were the first company to publish their Bitcoin ETF wallet address. Like I said, these guys are true OGs. So please go and check out Bitwise. They really are excellent. Go to bitwiseinvestments.com and see all they've got to offer. That's bitwiseinvestments.com, or just email them at james@bitwiseinvestments.com and let them know that Raoul sent you. Anyway, there are a million ways to access crypto. Explore how you can access it best with Bitwise. And remember, carefully consider the extreme risks associated with crypto before investing. Anyway, thanks very much.
Yalla Habibi!
It's good to be here at the main blockchain event of this year.
You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. What more can you ask? It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. So we get all of that, all in one place. See you at Token 2049 in Dubai.
Hi, I'm Raoul Pal, and welcome to my show, The Journeyman, where I travel to that nexus of understanding between macro, crypto, and the exponential age of technology. As you know, I think of all of these things as the same kind of big picture view, the world we're headed into and why we're headed there. And I always love to explore not only the individual components, whether it's crypto, exponential age, or the macro itself, but also occasionally I get to sit down with somebody and talk about the whole thing. And Jordi Visser is one of my favorite people in the world to talk about the big picture with. Jordi's an extraordinary thinker, really interesting. He comes from a very similar background than myself. We kind of speak the same language. We have a sort of similar understanding, but we also have differences. So I think you're really going to enjoy this conversation. It's definitely going to make you think and see the world differently. So anyway, let's sit down with Jordi Visser. Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together. Jordi Visser, how the devil are you?
It's been a long time since I've seen you. What are we, a few weeks now, Raoul?
I know. Yeah, it was great to see you in Miami. So look, I always love chatting to you, and you sent me a few ideas what you're thinking about, but as ever, there's going to be a bunch of stuff we want to talk about. But really, firstly, just people who don't know you, just give you a little bit of yourself, and then we'll start digging into what's on your mind.
Right. Yeah, just because we always run out of time here. So just very quickly, my entire career has been in either derivatives or macro. Started at Morgan Stanley, opened up my own hedge fund, brought it into another hedge fund. That hedge fund closed last year. And I am now spending all of my time in a consulting and soon to be content research role to help people adjust macroeconomically to two forces that you and I are both directly spending our time on, which is artificial intelligence. And I'll say crypto, although I'll just say, this new system that is evolving very, very quickly. And so I've had a fun time, but as you've known for a lot longer than me, a lot of the traditional finance world just still doesn't know how to think about it. And so I've been spending my time, as any good macro person would, learning the things I did traveling the world, living in Brazil, and trying to get an understanding of how crypto fits in both on the adoption and we're at the network effect side for me. So this is a big explosion point. How that's actually coming to play and how traditional finance people should think about it. So I'm writing research on both of those, and I spend about now honestly, it's got to be 5 hours, 7 days a week in artificial intelligence. So I'm knee deep in it every single day. I pay for every premium AI. We've spoken a lot over the years, but it's migrated. And just to give you an idea, I spent more time this week on OpenAI Deep Research and Grok 3, and I didn't even pay for them last week. So this has all been a big change, and I'm just enjoying the time in artificial intelligence. So,
hi, Raoul here. Listen, I think we've got until 2030 before the economic singularity arrives. Now, it might not be the exact date, but it's around then. So we have about 6 years to figure out how to unfuck our future. I've put together a report to help you called Prepare for 2030. It's going to help you take the first steps in that journey to make sure you're secure past 2030. So just click on the link below and start your journey now. Look, we'll dig into some more kind of stuff about here and now later, but I just want to frame the AI thing because I like you, I spend a long time in it. I spend less of using it to accelerate myself and more thinking about what this really means. And the more time I spend with this, the more I think it's bigger than I possibly could have imagined. Though I've gone down all sorts of very deep rabbit holes about consciousness and all sorts of stuff. What is your working hypothesis right now? Obviously, these things change about what this is for us. What does it mean? And you and I have kicked this around, but I always like to hear how your views evolve over time because that's our job. The two of us we try and learn, observe, digest this information and then interpret it.
Well, let me do it from 3 levels. Let me do it from the economic thoughts I have on it, the corporate thoughts, and then the individual thoughts. And that way everyone who's on here can kind of listen to whatever part they want and pick it out. From a macroeconomic basis, this is the most disruptive innovation we've ever seen. And I say that because the interesting thing about macroeconomics is at the end of the day, nominal GDP, and I'll give people a little bit of a history here, and you can jump in on there, but the concept of calculating GDP was not meant for a digital economy. It was meant for a physical economy. Simon Kuznets created the original GDP statistic during the Great Depression to try and figure out how to measure production in the country. It does not measure efficiency. It does not measure welfare. And so if you take welfare and efficiency for corporations, well, that's a really hard thing to measure. And Alan Greenspan wrote 2 amazing pieces back in 1999 and 2000 where he was frustrated because he literally came out and said, we have no way of measuring this. So he believed the economy was growing much faster than statistics were showing.
I remember that because you and I were both in the market then you were at Morgan Stanley, I was at Goldman, and exactly. You could see that there was money everywhere, but it was not being measured.
Yeah. And it's an important thing to just start with. You move from tangible measurements to intangible measurements. That's a very hard thing to do. So the first thing people should hear is the GDP statistics are bullshit. Now, if GDP is bullshit, meaning it doesn't measure the way the economy is, then the whole concept of productivity is not measured properly because productivity is an end result of GDP measurement. So if you start with a bad statistic, you're getting all bad statistics. That's the macroeconomic side. I've become more comfortable with that. The way that it fits into the next stage, which is the corporations, profit margins have been exploding since the personal computer came out. And so you're seeing the efficiency and productivity with inside corporations' ability to do this. Now, this is at the S&P 500. It's really at the macro level, but the more that technology stocks become a bigger portion of the economy, the higher the profit margins go. And so think of the Mag 7, their profit margins are enormous and they just continue to grow. So this has hurt small cap businesses. This has hurt individuals and it has really hurt labor. And I think to your point about where AI is now, we're in the acceleration phase. We're about to hit the agents at running speed, and then you've got humanoids behind it. So the labor versus profit margin story is a real one, and that's what fits into the individuals. And I mentioned this in my time down in Miami with you. I've written about how I think the corporate ladder has been destroyed. And what I wrote in my piece is it's now a step stool. You can only go so high up. And so middle management is now getting fired. And I'll end on this and let you pick different pieces. Meta fired 5% of its workforce this week. The company just increased its market cap by $1.5 trillion since the lows in 22. Its stock was up 20 days in a row ahead of the layoffs. When have we ever seen any company in the history of public markets that is at all-time highs, gigantically going up, firing 5% of the workforce? And these were mid-level employees. They called them low performers. But if you just go read some of the stories that are out there, I view this as all of that is just going to get worse with AI.
So how I've been thinking about this particular issue as well is all of politics through the pretty much the history of humanity has been a balance between labor and capital. But where we're going, there is no labor. So you have to change the entire political system as well. And it's not even clear there's going to be corporates at the end of this, because an agent is essentially a corporate that can do it without any staff. And then how do you measure that, to your point, is I don't know why productivity. Yes, I understand productivity has also been a function of demographics. And so it's been declining with the demographic decline. But soon, and I call this the economic singularity, all of this is going to break down. And we're going to have like 10% GDP growth and not accruing to labor. So it's a weird, bizarro world, right?
So you hit on something, and I want to bring in the other side of this, because a lot of smart people like Mark Andreessen, almost every podcast I listen to now with technologists says, yes, there's going to be job displacement, but every new innovation creates more jobs than it kills. That's the story that I hear. And I don't have a problem with that theory, but here's the problem. People are not happy. So there's a difference between you can work and you have, I mean, I talked to someone at your conference, let's just say a doctor, comes out of school, has all this debt. There's no hope to make a lot of money based on the math behind it, like how many people you can deal with, dealing with the insurance and all of that, where that used to be an aspirational job where you put all this hard work in and you do that and you get paid off. So I think there's an element here of mistake where people are focused on labor versus capital. Will people have jobs? I do think if people can handle riding around on a motor scooter this year, delivering things, they can make a reasonable living and add it on to whatever job they have part-time. But people are just getting more and more unhappy. And that's what feeds back into crypto eventually is if you're not happy, you're looking for some entertainment, some happiness. And that's what work used to give you. And the word is hope. And I think a lot of workers are just losing the hope.
And I think, we're just going to jump around very fast now. This is what is creating the rise of the speculative economy that we're seeing. We've just seen the results of Robinhood. We've seen the results of Coinbase. You can see what happened in meme coins. You can see it everywhere. We can see it in prediction markets. It's like it's becoming speculative economy out of necessity and then out of entertainment. There's kind of two elements of this that are not going away. I think these are secular trends. People, particularly our old brethren, will kind of go, this is awful. This is all about free money. I'm like, no, it's not. It's about the opposite. It's about the people are so fucked that they have no choice but to speculate.
Yeah. And you know what the funny thing is, Raoul, since we think about the equity market and I'm looking always at, well, what in crypto is the same as traditional finance? Why can't they make this connection? So meme coins, I think everything started with meme stocks. So when GameStop was going up back then and there was no reason for it, there's gambling, and there always has been, but we also have one-day options that are now just exploded in the traditional finance world. So gambling has become a part, and my son has been involved in this. He loves FanDuel. He loves all this stuff. He doesn't have the same viewpoint that we did. Our grandparents lived in the Depression, and we had some element of you never waste money, but we still go to Vegas, so it's not like that's not there. The second thing is, when you talk Solana and you talk Ethereum and you talk SWI and you talk things that people can make an innovation story and they can feel good about investing in something, well, that obviously exists in the traditional finance world. And then Bitcoin, to me, I've always said, I believe is the S&P 500. It's just the other part. And when I talk to the people down there, they viewed all three of those buckets completely separately. One is they're doing their homework, they're investing in something. Another, they're playing games and they're trying to be access being early to it and have an edge. And then the final part is the money goes into the bank and it sits there, and that's the way they accumulate wealth. So I don't see them as any different. And I think everything you said, I completely agree with.
And also, look, before memes, it was penny stocks. I mean, gambling's always been there, but you're right. Our generation is not big gamblers. Yes, might be casino gamblers, blah, blah, blah. We kind of like financial markets and the puzzles. But this generation, Gen Z and the younger millennials, grew up on gaming. The whole world is gamified to them. This is just a game. It's a game with, as opposed to earning some sort of badge, and they're very badge driven, they actually earn money.
And you know how I know that they're better at it than we were in terms of exactly what you said? So one is, I'm a big poker fan, and I watched how the online poker crew became very, very good in the overall poker world. And all the best players would say, these guys, it's impossible to read these guys. They've played too many hands. Them losing or going through it, they move on to the next one. And you know how important that is with trading. You can't let your last trade affect your next trade. Well, when you're in a world where you're worried about a depression and you're worried about, the depression coming back again, you kind of protect a good portion of it. And so it's not the same thing. And so I see that happening inside the crypto world. These people, they don't get down when the stuff falls. They jump back in and they keep going through. They actually enjoy the fact, and they're honest. And I will challenge anyone who has talked to people our age. How many people have come back from Vegas that you've met and not said, I won big? I mean, as far as I know, the odds at Vegas, because I've actually never gone to Las Vegas. That is a true story. As far as I know, 85% of people that go to Vegas win, because I never hear about people ever losing there. So at least the crypto people are honest about losing in meme coins all the time.
And they also celebrate losses. There's like this kind of, it's like it's part of the game. It's like when you're playing a game and you try to get to the next level and you fall back down, you have to restart the game. It doesn't faze them. And again, people of our generation look at this and say, this is disgusting. How they're allowed to do this. They should stop this. But this is how they operate. They think differently.
Yeah. So let me jump on that and take it a little bit of a different direction, but it's connected, and we haven't talked about this. So when I lived in Brazil, that was one thing I learned very much. So Brazil's distribution of wealth is dramatically worse than the US. So people have nothing, and then people have a lot. The people that had nothing, they have no fear of failure. They just want a chance. And the reason that that's important for what you just said, I believe that people that love to fail, meaning because they know they're going to come back, and so it's a badge of honor. Well, that's the same thing you hear in Silicon Valley. It's the same thing for entrepreneurs. You're not a true successful person in Silicon Valley unless you failed and gotten yourself back up and gone through it. Well, I believe when DeepSeek came out and we had the democratization of AI and open source, it opened up, and I've said this, 7 billion people on the planet who do not trust their government, who do not trust their banks, who do not trust their currency, were just given something where they can be entrepreneurs, and you're going to see a rise of that. And I believe that the second that they make $10, $20, $30, $100, they don't trust their currency, they don't trust their bank, it's going into crypto. And so I believe DeepSeek and that merging of AI to exactly what you said, failing in crypto is an emerging market thing. It is a Silicon Valley thing. It's an entrepreneurial thing. Those two places are coming together, and that's why the network effects are starting to connect with AI this year.
So how is AI going to fit into financial markets, corporations, and that? What's your working hypothesis of that now? How does it fit in alongside us? What role does it play? And what does that do for the economy?
Well, the agents will dramatically increase the volumes this year. So I've been saying since Stripe announced their purchase of Bridge that we were at the point. Then Donald Trump took over, the administration went through. I was with one of the macro funds this week who has a very big presence in digital assets, and I was talking to one of the founders, and he said every single bank has been into his office in the last month, and they continue to come in. 3 years ago, they didn't want to hear a single thing about digital assets. So the one thing is the administration and the fact that we have a czar of AI and crypto connected is a really important story. I mean, they're connected in a title at the White House and someone that lives on the property of the White House every single day. But I believe it's stablecoins that have always been the true bridge and the way for B2B to transact across the globe. And so I think we're going to see incredibly high volumes. And like I said, if you break those volumes down, many of them will be going on through the emerging markets. So it's the payment side, which you've obviously spent a lot of time on. The way for the merger of these two and the way that AI is going to speed it up is a lot of these are going to be done through agents, but it's also the entrepreneurs are going to be using AI to build their businesses. So it's both on the agent side of transactions, the robo side, but then it's also on the creator economy growing dramatically and those people being able to use social platforms. Because remember, if a kid in Indonesia wants to sell something to Americans, it's a very hard and taxing thing because right now for remittances, it's a 6% charge. So to get it down, the payment side is going to be the big one. And I think the Stripe purchase of Bridge was a big deal. And I always said to pay $1.3 billion for something that had, I believe, $15 million of revenue, that's a big story, especially for Stripe, which had bailed out of the digital asset world not too long ago. So that's how I think it's going to intersect this year.
So stablecoins, I think, is the big use case for now as everything else gets built. And, you've been talking about stablecoins, and we'll come on to that in a second as well. But something you said just struck me. It was a really fucking blindingly obvious thing, is volumes are going to explode because agents are going to be trading or using it for payments.
Yep.
And that tells me there is a really nice leverage trade, which are two trades I'm in anyway, but it is Robinhood, Coinbase, or any decentralized exchange, anything that benefits from increased activity in financial markets, particularly crypto rails. It's going to explode. Well, it'll work for equities too. It's going to explode because you've just brought infinite new traders into the market. We've seen these kind of AI models trading now. I hadn't thought about this. We've now brought infinite traders in.
And they'll be algorithmic. So you and I know this. When you brought high frequency guys into the marketplace, how much did the volumes explode? It just brought more volume because they were taking an edge in the marketplace. If you're not reacting to things super quick, and I just think everyone who's on X has a huge advantage to people that are reading the newspaper. I think everyone on X has a huge advantage. I think people on Reddit have a huge advantage. When my son told me back in 2020 about the companies he believed in, and he explained to me why, and I said, where did you get all this information? He got it all from Reddit. Now, he was 13 years old, and that's what I started listening to Michael Saylor right after. I said, this is not something fake. Like the fact that my son can talk to me like a portfolio manager at his age and understand the innovation and at least the hope side of what it is, that's when I realized. So I think people are missing in a way. And if they really want to, just go into YouTube and type in AI hedge fund analyst, AI agent hedge fund analyst. These things are growing so rapidly. I have a person who works at AWS and at Amazon Web Services, and he has sent me multiple things because I was trying to build my own, not to use for trading, but to use for research and to use to replace hedge fund people. And it's amazing what you can do. So yeah, the volumes are going to explode. And I do believe I think the companies you mentioned, absolutely, because crypto will be a part of it. You'll have the merging of them involved in the TradFi world, but also in the crypto world for sure.
And why do we need the middlemen of you going to deep research, doing research on something, and then going to your AI agent and say, train this? We've become middlemen, right? We were the people who distilled the information and then built a hypothesis and then invested accordingly. But we kind of don't need us in the middle now because deep research can do the work and the agent can do the trading.
I think you'll like this. So when my prior firm was shut down, I got a lot of calls from people on the hedge fund side to come in and to start a fund. And I think initially I'd been at a place for such a long time and I love the founder that I was like, all right, what am I going to do? So over time, I said, let's just take a break for a while. Let's let everything settle. Let's use the summertime to enjoy things, but let's start to code and start to understand AI. So what you just said, I view every single hedge fund, and let's just say hedge fund, every VC fund, every whatever, as now competing against AI. And I think they will be slow to go out of business because they're just making if the amount of pie that they could make was 80 of the 100, it's going down to 60 of the 100, and that extra 20 will be replaced by the little people we're talking about just eating away at the margins because they're faster, they're quicker, and they're using agents. So what do I want to be a part of? A company where I have to manage people that's having trouble staying in business, or selling content to them and consulting to them about this fact to try and help them survive? I'd rather be on the other side, because I think, there's more edge in me going out there and doing that than trying to choose a company that has any chance of surviving versus people that have $100 to $200 million budget a year in technology.
So this is why I set up Global Macro Investo 20 years ago. I
really?
saw that time horizons have been pushed shorter and shorter by the investor base in hedge funds. I saw that returns were then coming down. So a macro fund used to be like 15% volatility and 30% returns is what they aim for. And then it all got crushed down to sub 8%. And I'm like, I don't want anything to do with this, but I have a tremendous amount of experience, so I might as well start advising all these people. The hedge fund industry exploded and then slowly shrank, but that was the better way round of doing it, because the hedge fund industry has just been a miserable game ever since, just gone to asset gatherers, and the returns keep going down. But what we're seeing, what's so laughable now, is people are still investing in hedge funds to get 8% returns, 10%, 12% in a great year.
Yep.
And yet just buy and holding crypto has been producing 100, 150% returns with downside. And you see, after a while, everybody has that light bulb moment. It's like, why the fuck am I doing this other stuff?
Yeah. Well, I wish I had come to that realization the time that you did. It was a much better trade for you than me sticking in the hedge fund and going through the pain that was associated with it. So I give you full credit for that.
It was hard. It's miserable. It used to be a beautiful game, and then it became a miserable game.
Yeah. It has been fighting. It's been a knife fight every single day. And it was funny. You remember in the late 90s and the early 2000s, you were at Goldman and I was in Warren. We still had those partners that had been at the firm for a long time. And they talked about the 70s. And they were like, wow, the 70s was a knife fight every day and went through it. And I'm like, we've been competing against computers since, really 2002, 2003, but it got really bad once World Quant was officially getting more involved in the market. And now you had the Yeshua, you had World Quant, you had Renaissance, you had the high frequency guys. There was just a negative edge that was being taken out. So it literally became like being in Vegas. You were playing with odds that were against you. And it wasn't a question of whether you could have a 12% year. It was a question of whether you could produce 12% a year returns for 5 years. And the probability of that has gone down dramatically. And I think the same thing has now happened to commercial real estate. I think the same thing has happened to venture capital. I think the same thing is happening in private equity. And so if that's the case, then more and more institutions are looking for something where they can generate the returns that at least allow them to provide the alpha. And that's why when I listened to Michael Saylor in 2020, I found it to be what he said, elegant. I just watched a recent 4-minute
of him and Apple.
No. He was interviewed by Scott Galloway, and I was on Twitter, and someone said, if you're ever going to question whether Michael Saylor is smart or not, just listen to this thing. He did this in December, and everyone should understand why he did what he did at MicroStrategy and hear his evolution of it in a 4-minute clip, because he gets viewed as this bombastic person. And I just think what he's doing is exactly getting ahead of the curve, the same way you did when you left to do GMI. It's just a better business model to do this. So now we're both connected, where I'm, following in your footsteps, but I'm heavily involved in crypto and AI in a very, very big way. And AI allows me to be very efficient in my job, and it allows me to do things that I never thought were possible that I've always enjoyed to do. So by using it every day, I have a view of how I can use it and also enjoy my life, and crypto and AI give me both of those. So
I'll come back to crypto in a sec. I want you to explain to people about deep research, Grok 3. These are new things, and they're both pretty spectacular. But deep research is, it's mind-blowing.
Raoul, for people listening, so deep research is now available in some form from Gemini was the first place where I used it, and then Perplexity. And you have it on OpenAI. And if you see these things of pay $200 a month, I was very reluctant to pay the $200 a month, but I had talked to people about it. So I'm a person that always loves to get the entire story behind something as a macro person. So what I told you about GDP and the measurements, if I go into deep research and I say, hey, I want a 60-page report. I'm going to do this first just without a prompt that is, like a whole page long. And I'll tell people as an example how they can do it. But if you go in there and say, I want to learn the history of GDP, why the digital economy as it grows starts to disrupt GDP as a measurement, what are the reasons why it's not a useful statistic today? Please give me details behind credible people in the 1990s and 2000s, both on the economic side and the technology side, who have an understanding of this. And it comes back with, on that, a 20 to 30 page report. If I extend the prompt and I have a template for a prompt that I copied from Twitter, that a guy said, all you got to do now is go into this reasoning model, type this in, it'll give you the prompt. You type that into deep research and it'll give you whatever you want. Now, when I say that, I mean everything that I would want. I've been reading McKinsey reports for 15 years. They're free on the internet. I find them to be the best thing about where AI is going. These are 150-page reports. This thing is better than McKinsey, and it does the exact same thing. So now, as opposed to having to wait for when McKinsey is going to come out with a report that I'm interested in, I just do it myself. One of the places I think we've differed over the last 6 months, I'm a big believer that this is going to be an inflation year. Not a big inflation year, but it's going to be a stagflation year. And I think we're starting to feel the effects of that now. And the reason is because of the power needs for AI that are happening too fast. We do not have enough power on the globe right now. We're going to solve that problem. But every now and then, we're going to have a little increase in inflation. You're seeing it with agricultural prices. I think you're going to see it with energy. So if I want to go see what kind of power needs, I start with something like Colossus, the data center that Elon Musk built. And I say, how much power was needed for that? If we're going to do all the build out that's now been promised by the hyperscalers, how much power are we going to need? And I get a sense as to where it is. So that's the way I now do my research. I don't look for Goldman Sachs. I don't look for any of that. I get my research from AI, and it's better and it's real time.
Yes, but you're blessed with a long history of trying to figure out the jigsaw puzzle, so you know what to ask.
Right.
It's actually quite hard to, it's not an average thing to do, is say, listen, I'm concerned that nominal GDP does not include technology, and Anna agrees. So this, that's not a normal question to ask. So that's the hard thing. But again, my guess is if you prompt the AI right, you can ask it to ask the right questions. But there's still a lot of skill in that, right?
Well, and this is the part, like here's an example. There's a reason why you invited me to come speak at your conference. There's a reason why you've invited me at times to come on here and speak. So hopefully, I know it's not my look, so there's got to be something else involved. And I'm pretty sure it has to do with my brain's not normal, meaning I think of things and I'm constantly thinking of connections that could be there or not be there. And that is why it's a better idea. It was good for me to make money from my life at Morgan Stanley. It got me to rise up the ranks very, very quickly from the bottom to opening an office in my 20s. It got me the chance to be at a hedge fund and make money there. And I think it allowed me to figure out how the intersection of AI and crypto is so important. But that's because I'm constantly connecting dots and I never believe what I read. So I do agree with you that for people that are listening, you have to ask the right questions. But the way that I do that is I spend 20 hours a week plus. And I know this now because I track it on an app that I had Grok 3 build me with inside Replit, which is I always wanted to keep track of the time and the resources I have. Because people ask me, what podcasts do you listen to? And I never know because I'm thematic. I'm not listening to one podcast all the time. But I do 20 hours a week of podcasts / YouTubes because that's the real-time information. I'm on Twitter 1 hour a day. That's real-time information. Everything in AI is moving so fast that if you try to wait for a book or you read it in a paper or you go ask someone about it, you can't keep up. It changes too rapidly. And deep research didn't exist 3 months ago.
And again, this goes back to a conversation you and I have had many times, is we are not able to deal with exponentials. And now we are seeing AI. It's very clear now that within these big AI companies, they're using AI to build AI. The synthetic data is AI training AI, right? That is a hyperloop that accelerates faster because now they're finding out for an equal amount of compute and energy, they can actually extract more from a model, which was not expected. So that's the big breakthrough of the last 5 months or so, is actually we don't need to increase either of those two inputs, but if you do, it's going to go even faster.
So there's a couple things, and I know people probably, don't know enough about AI to kind of, they still hear the thing, there's hallucinations and all this stuff. So I think it's really important to separate one thing. When DeepSeek came out, and I'll play a game with people that I've tried to give some explanation to make it easier, because if you listen to a tech person describe the difference between an LLM and a reasoning model, it's very difficult. So for an LLM, the original ChatGPT, Elon Musk has said, and they will agree, because you got in we're in synthetic data now. And the reason we're in synthetic data is because they have consumed all pieces of human knowledge that has been written or done in video. Every single thing has now been consumed by
that is
AI.
Publicly available. We've still got a bunch of stuff that's private, but yes, everything.
So everything that's public. So when you're looking for hallucinations, yes, is there a probability that some piece on the internet has a mistake, or the news or whatever, it's biased? Yes, you will get something that is either wrong or whatever. But with reasoning, you slow things down and the model thinks about it and does checks and goes through it. And that is the difference. Now, this is why when DeepSeek came out and everyone shorted the stock and they were like, well, this is the end of it. And I went, did people realize how much inference memory is needed and how much it goes on? So the game I play is, how much is 2 times 2? Well, people know it's 4, but that's from pure memory. That's an LLM. If I say, what's 38 times 27? Well, if you're pretty good at math, you can probably work through it in your head, but it's going to take you 10 times to 20 times to 100 times what it took for 2. That's the difference between them. So when you go through a reasoning model, it's now reasoning as to what would be the right way to attack this problem, what would be the right way to solve it, where should I look, how should I compare it? And that's where we are. We've gone from LLMs and memory to reasoning, and that's why we're getting closer and closer to AGI, or at least that's why you start hearing more and more people say it. And that's why when Elon Musk goes, the next 10 years will be like the prior 100 years of innovation, to your point, it's just moving too fast. And that's why I think the message I will say to people, if you think your job is all of a sudden going to get better, if you think your upward mobility with inside the company is all of a sudden going to get better, particularly people below the age of 30, AI is coming to disrupt that entire thing because businesses don't need to have as many people. And that just means the hope and the aspirations start to go down. And then more and more people are driven to crypto for people that are educated and wealthy. But in particular, the entrepreneurial side from democratization of AI is happening right now.
Sachin Nadella said something very interesting on that Dwarkesh podcast. I don't know if you've seen that yet, but super interesting, which was, forget about his idea that we don't need to, he can rent compute now as opposed to keep building, whatever. But he said something interesting about AGI. I guess it doesn't matter. Come to me when we've moved GDP by 10%. And,
right.
I think that's the key point that you and I think is coming when the economic system starts falling apart in ways. I mean, the study of economics is not going to work.
No, it won't. So this is why the inflation thing is so important, because if inflation stays at 3-4%, the problem is nominal GDP is not going to be helped by AI. And let me go through this and make sure. So this is the point about what Greenspan said, and it's what I keep saying. You have to think of do more with less. So if a company, and let's assume that GDP, nominal GDP, because it's revenues basically of everything. So think of it as a revenue number. If you're running a company and you have right now $1 billion of revenue, and next year you have $1 billion of revenue, that doesn't mean you can't grow. If you can cut your expenses down dramatically, you just grew your earnings. So the problem is, and this is why I've kind of alluded to you, and I think Julian and I talked about this, I actually think AI will hurt liquidity, meaning the traditional liquidity measurement, because doing more with less gets into two components. I think the nominal GDP and the inflation data is just wrong. We know they can't calculate inflation. It's just as hard to calculate inflation in a world where your iPhone has replaced so many different things because they didn't know how to do it. So I think GDP and inflation are just wrong. But people trade off those. They make decisions off those. But profit margins can continue to grow. So I've kind of come to the conclusion with AI that I really think we're at a point where it's it's a welfare thing. It's like your lives are going to get better because you're going to live longer, healthier. You're going to get better because gas eventually will cost zero. And this gets into the abundance story. But in the lead up to abundance, it's probably painful. And then the question is, as people are having trouble with work has become, and it has been for a long time, and this is why I don't agree with Mark Andreessen. My last name is Visser. It stands for fisherman. My name was based on, my lineage is back to Friesland, Holland. So
my mother's from Friesland.
Are you serious? It's amazing how many people I meet that are from Friesland, whose connection is to Friesland. It's a little tiny place. So the Frisians are well documented across the globe. But here's the thing: my last name being Visser, we've used our names as our identity for a long time, and so we're talking about artificial intelligence hurting that. And I just don't think that makes people happy. So the next 4 or 5 years, even though I think it's going to be good, I just don't think we're going to see the productivity boom at the economic level, which is really more psychological. I think it's going to happen at the profit margin level. And I think unless you're an entrepreneur and you're able to do what we're doing, which is not work for a company where you can be happier and you can enjoy life and you can work and use AI, those people will be okay. But I think the people working in corporations are just going to have a really hard time because I think they're going to be taken advantage of.
Yeah, I think that's right. It's David Matten and I talk a lot about this. I think the next election is all going to be about the accelerationists versus the decelerationist. It's the transhumanists versus the humanists. That is the big battle that we're going to face over the next 20 years until it matters not anymore. But it will not be about anything we've had in the past. Everything we fought an election about, by the time this administration gets to where it wants to get to, it is going to be, holy shit, I want off this rocket ship, or I just want to strap onto the rocket ship, and that's it.
Think about what you just said and about the psychological point we're going to reach. So I've had people say to me, I'm scared of the future because I don't know what work means and I'm worried about my kids. Then at the same point, if I say, but you're going to live twice as long, then they go, wait, I don't have enough money saved up to live twice as long. So everything becomes a fear on exponential innovation. There's no way you win. Hey, you don't have to work as many hours and you can make as much money. I haven't saved enough. I'm screwed. But you can live a healthier life and you don't have to deal with all the pain and stuff. I don't want to live longer. I want to live a normal life and I want to have my pension. And it's hard for people to adjust to it. So that's the reason why if I meet, a teacher or a professor at your event or a doctor, and they tell me the same story regardless of their profession, that to me is that Venn diagram of macro learning that says, why are you here? Why are you at this crypto event? And I think it will gather more people. And I think the more people that get involved in it, they're going to find an economy that's better suited for them with more enjoyment and a better community.
So, I stumbled across a mimetic that I use that has really encapsulated this, which is unfuck your future. There is this pervasive feeling that your future is fucked, whether it's from technology, debasement of currency, structural shifts in society, aging populations, all of these. That is the thing, and crypto has become, here's our way out. It's the life raft. And you can see from that Real Vision event, had we gone back 10 years, none of those people would be even thinking about this stuff. But they've been forced into it. And I'm now noticing on the Real Vision platform more and more women coming into the space, particularly women who have, where they've got divorced, they've taken control of their own finances, or career women who've I need to sort this shit out. And before it was a very male thing, crypto. And now I'm just seeing more and more women coming in and saying, oh, I get it now. This is actually my future. And the way of manifesting my future is going to be taking this risk in this asset class because it's the only way.
Yeah. So I spoke on a panel with 3 other people, and there were actually 3 times. This has never happened to me at a conference, but there were 3 times where I said something that people started applauding. Okay, and all of them.
This was at the Real Vision event.
This was at the Real Vision event. Yes.
Wow.
And this was about. So one of them was about me setting up a strategic Bitcoin reserve for my kids, and I explained the reason why. And again, I said, you guys are not allowed to touch it. This is for you to have the hope and eventually to get involved in this, because as it works, you're going to be more involved with it because you've benefited from it. And I was teaching them, this is the way you're going to feel like you have the opposite of worrying about a depression. This is going to feel the opposite of worrying about saving, because this thing is going to compound fast for you. And so if the U.S. government never does it, I mean, El Salvador, think of it as I'm doing it for my kids in the same way I saw emerging markets. So that was one story. There were other ones that all involved with my thought process on this as bringing back hope and fun to people. And so when the applause are less about me talking about why it's connected to AI and stuff, and it's more about that it brings back hope. Hope is a very, very powerful word for people. I realized it in Brazil, and you've seen it in your travels. There's a lot of countries where people just have no hope. They have no access to education. They have no access to being able to get a job. They have no access to stuff. In this country, it's very, very different. But I think for people that have lost the hope of upward mobility, that have lost the hope of enjoying their day-to-day, I just think that I felt that in the community, and the applause thing really hit me. So.
And I learned this, and you've learned this, is that once you change your mindset from the macro doomer and become the secular bull market, oh my God, this is amazing, and we can make money for it, the world's going to change, and it's so much easier. To be hopeful as opposed to fearful is like a sea change. And I see it in so many people when they go through this crypto journey, they come out the other side and they're like, oh, I get it now. I can be an optimist, and it's okay.
So here's the funny thing. Almost all the money I've ever made in my life has been during bear markets.
Yeah.
So
that was the macro game. That was the game.
It's the macro game. And so my biggest year was 2008, and every trade I had on worked great. I traded emerging markets throughout the 90s, and I moved my way up the ladder. Most people in emerging markets got fired every 2 years because there was always another bear market, and they'd get levered and they'd be gone. And I not only did well, but I came back and they gave me the biggest book at Morgan Stanley to run on the derivative side in the S&P book when I came back after being in Brazil. So my career was made on that, and I was called Dr. Doom and Gloom because I was bearish. And the year that changed it, and I don't think we've talked about this, but it was 2012. So I really was concerned that the EU would break up. I was one of those people that was like, this is the only thing left. We printed so much money, but now Germany's got to print money. I don't think this can happen. So when Mario Draghi did the famous line in August of 12 and said they'll do whatever it takes, I went, okay, I don't even know what that means, but I do know this. That's a big statement for Europeans. So 6 months later, I made the decision to not travel to China because China had clearly stopped growing, and now it was in a complete deceleration phase. And I went to Silicon Valley for the first time, and I went to Singularity University. I met Peter Diamandis, and I started ending on this journey. And that's what led to me realizing that, oh my gosh, we're in exponential innovation. And I don't want to think about this, but the connection I did not make, and I blame myself for this, 2011, Mark Andreessen writes, software is eating the world. So when people go, well, the U.S. is going to fall because the U.S. companies are overvalued. And I go, they're not U.S. companies. They're global software companies, completely different. These are not U.S. companies. This is actually the first stage of AI. They have no boundaries. They have nothing. Their revenues are mainly overseas. So completely different. But then Mark Andreessen wrote Why Bitcoin Matters. And so when people have asked me what they can read, I always say, read Why Bitcoin Matters from Mark Andreessen. And then he did another post in an interview in the Washington Post 5 months later. Two of the seminal pieces for me that it took me a long time to find, he was right on everything he wrote in there. And it really is the thing of, why do you want to understand what Bitcoin is? The paper was digital money. They solved the problem that he wrote. Every programmer he sent to go spend the time on it says he should get the Nobel Prize, meaning Satoshi. So once I started to realize that exponential innovation was just a math formula, that it was compounding very rapidly, and that all of these things would change, I realized, like you did, that the brain's not meant for this and that everyone didn't know how to talk about it. So that's when I started saying, There's no such thing as recession because you guys haven't made the transition yet to understand that software and everything else can't be met.
I mean, we've talked about this before. I mean, you completely sideswiped me with that statement. It was in your office when you said, listen, I don't think there'll be recessions again outside of exogenous events. And I went away and took that whole GMI article, in fact, anchored a whole bunch of stuff around that. And I think you're right. It's very difficult with the structure of the economy and how it is for that to happen. And then you've got the debasement of currency that allows you not to have a collateral or credit crisis. So in which case, and we've also, you and I talked about this as well, another conversation for another day, but we've talked about this is we've replaced a debt-based economy for an equity-based economy because all new companies are now formed out of equity and not out of debt. You used to borrow money, go to the bank, start a business. Right, banks don't fucking lend you money to start a business now. You have to get equity. So then it's less systemic risk because you don't blow up debtors in the banking system.
So if people, they go through this, like, well, who has a lot of debt? It's all the old industrial companies. So if you go look at Ford, the stock is unchanged for the last 20 years. If you go look at like commercial real estate, what returns are commercial real estate going to have going forward? Housing market is
AT&T, they're all the same.
They're all the same. And so we're actually doing what's supposed to happen. There's no cyclicality. These companies never come back anymore. They just die a slow death. And they're kept alive because they have voters. And at the end of the day, when the S&P goes down, and this is why, I said last week was such a big deal. Anyone who really thought inflation was completely dead, there's no way to look at what happened with core CPI and have it be the largest in 30 years outside of COVID for a month-over-month number and not realize that, okay, we're not going back to where we were before 2019. We may not, I don't think we're going up very much, but I think we're going to sit there. But it makes tariffs really, really hard when the median voter is already not happy. They're already a complaint. We had the University of Michigan numbers come out today and the 5-year inflation expectations, which I agree are biased by the political side. So everyone who's a Democrat thinks inflation is going to be up dramatically. But regardless, you have it at 30-year highs outside of COVID. You're just it is 30-year highs. It's not even ex-COVID. Today we got 3.5% for 1 year. It's just a time where the administration wants to do tariffs, but it's very hard with fiscal dominance with this problem because if you knock the stock market down, tax receipts screw the deficit. So tariffs for what? You need tax receipts. If the tax receipts go down, that's a bigger nut than he can get in tariffs. So it makes it very difficult because as inflation's higher, if he does tariffs and that takes it up another 40 basis points, 50 basis points, and the equity market sells off 20% out of fear, then you've got a bigger problem here because he can't get the tax receipts because that's where we are as a market. We've got the stock market as the biggest generator of tax receipts in the country.
So how do we solve this? Or how does it play out this year and next year?
I think AI continues to dominate. I really think the Meta thing was
a big signal.
Yeah, they're paying for amortized CapEx through making sure that they don't have compensation expense and employees going higher. And I think with agents and humanoids on the way, and everyone can debate when they have a huge impact, but the reality is every day they're going to have an impact.
Jordie, wasn't it? I can't remember whether it was a bank. Somebody also made an announcement just in line with this, which is they'd make record profits, but bonuses weren't going up. And I'm like, fascinating.
There was a Bloomberg article a month ago that talked about the fact that the CTOs, and this was on this, expected the employee numbers at the banks to be 2% lower. I think it was in the next 3 years, maybe it was 4 years. There's no such thing as a bank ever forecasting that the number of employees would be down 3 years from now. The second thing is Jamie Dimon on his, return to work thing publicly came out and chastised his employees. Now, again, it wasn't that long ago they had to beg people to work. Forget getting them back in the office. They're not worried about people quitting is the point. The problem is to fire people because of AI is a no-no. So you're better off getting them to quit. It's much cheaper, so people realize, having worked at a bank and having worked at a fund. Firing people, there's severance, there's all kinds of stuff. Quitting and going someplace else, you lose that expense. So I think the labor capital thing is going to become a much bigger challenge going forward. No doubt.
And there's something you said that was been sticking in my head since you said it. Yeah, we talked about Mark Andreessen saying it's all going to be fine. There's a bunch of people say it's all going to be fine. I kind of think that over time it will be. We'll figure out different ways, and I think the crypto economy and the community-based economies and stuff will solve that. But I think they're also all lying because they don't want the political backlash. They want the green light. They've got a 4-year green light to do whatever they want now. And so none of them are going to say it's going to take your jobs.
Yep.
They say at the margin it will, but they're highly incentivized because the size of the prize here is like staggeringly big.
So here's the thing that I don't believe we will have job losses. I believe we will have lower hiring and there will be displacement. But we have a shortage of physical labor jobs in this country, and it's a big number. So that's where humanoids will eventually fit in, but we're not getting humanoids of mass numbers in the next 5 years.
No, we're not going to have humanoid plumbers yet, you know?
No. It's not coming soon. Can they already do some of that stuff? Yeah, sure. But we're ways away from that. And there's a lot of politics. And if it's not in 4 years, we don't know who the next administration would be and how much they'd be protecting jobs. So people don't have to worry about that. Nurses, doctors, we're not replacing nurses and doctors. And people, even if they're going to live longer, the people that are really unhealthy right now, they're still going to be unhealthy. And we have a demographic problem that is still coming up. So there's just no way to not have a good job situation.
And also we're just running down the baby boomer population and we're just not going to replace those jobs.
Exactly. And nobody wants those jobs at a younger level.
No.
Which is the issue. Again, I just think that three of my daughters are in the healthcare / social work field. Talk about high stress and how difficult it is. And they work a lot of hours, but they're not dealing with people that are healthy. And it's just not fun. So the work thing is really the big thing. So you asked the question as to how this plays out. If profit margins keep getting better, the stock market will be fine because the companies will keep doing buybacks. And I just don't see people selling off stocks as long as profit margins are high. Earnings are not going to fall unless we get a big change in the economy, as we know, or a big rise in inflation like we saw in 2022. So you either need a 2020 playback or a 2022 playback. And I don't think either of those are coming. I think rates are kind of stuck around these levels. Inflation's stuck around these levels. GDP will go up or down a little. And so at the end of the year, it's not a question of whether I think earnings will grow. It's really a question of what the path to the stock market kind of moving that way. I have talked about the fact that I do think the Mag 7 and the rest of the world are going to kind of migrate towards each other. We're seeing some of that right now. Bitcoin should outperform the Mag 7 and institutional adoption will accelerate if that's the case. So I will finish on one point that we haven't yet talked about. I really do believe the network effect, the point where Facebook starts and it grows because of people more and more people using it in the ecosystem. That is where we are with crypto, and the volumes of stablecoin and AI agents will bring profits to individuals at home and profits to people around the globe. And even though a person in Indonesia does not have enough money to move crypto, when you combine all 7 billion people and each one of them has $100, then all of a sudden they have the ability to move stuff, or at least the adoption will go. And you brought that up. You follow adoption. I follow adoption. Volumes in stablecoins are going to be a very big part. So the ecosystem to me is going to grow rapidly this year.
Yeah, it makes sense. And I think you're right. That train of thought where the disruption of AI forces people into the crypto economy, which forces more adoption, is going to be bigger. So I'm going to leave you with one train of thought because I think it's an interesting one. Satya Nadella announced that they have a bloody chip this big that is quantum. And it can do compute in 1 second or 1 second that takes, I think it was something like 10,000 years for all the computers on Earth added together to do.
Yep.
Okay. So everyone's like, oh, that's amazing, and people are starting to say, like, I had a conversation, someone's like, well, they're going to crack all diseases, they're going to be able to do this. I'm like, yeah, absolutely. You have no idea what happens when you put that chip with AI. That is God. Right? There is no limit to the power of this thing when you do that. And Nadella said something quite shocking. We all thought this was 15 years away, then 10 years away. He goes, it's only a few years, 2 or 3 years away. I'm like, so this is the leap to ASI, where we are not now, there's a different structure of the planet. It's just, we are complete. And and I don't know what that's going to mean to anything. I mean, literally, once you've got something that could do all the compute mankind has ever done in history and do it in 1 second, and then you add it with self-learning AI, then I don't know anymore. That's beyond, the economy's going to change structure. This is like, I don't know what anything is.
So you brought up 2 things from this week, both of them Nadella conversation. So one is the release of, I think it's Marana, right? Is telling, we've got this. So quantum moves up, and he talks about how fast it could be here. The second thing is he has an interview where he says, I'm not focused on AGI. I don't even know what AGI means. And for people at home, if you didn't know either of these things, so Raoul and I are paying attention to this, and we're going through it because we're looking for AI stories. When I do my YouTube video every single week, it has 3 parts. One is just a recap of the traditional macro world. I consider that the thing that most people care about, but the thing that they should be caring less about. And then the other 2/3, it goes to AI next, and I go through all of the things in humanoids and AI that have happened. And then the final part is crypto. And so I link them because that's the bridge that I think, which is the economy is being disrupted by AI, and we're going to end up in crypto. Those stories are so important for people at least to have in their mind to think about, and then they can ask that question. When you brought up, I thought you were going to go to, so do you think about how this ends up being a hacking thing? And we had a hacking thing in crypto today, and everything goes. And I always say to people, so you think if China ends up having quantum, the first thing they're going to do is go hack Bitcoin, or maybe nuclear weapons, maybe US banks, maybe whatever, like the grid. Why is the first thing going to be crypto? And even if it is the first thing, everything else is screwed too. So why does it all matter? So to your point, I always take these things as what I've learned in history, which is no matter what happens, if it ends up in the hands of someone who's dangerous, they have to assume that other people don't have the same thing, aren't there as well. And so when Microsoft makes an announcement, we don't even know what's true or not true. I got to be honest with you. Google did the same thing not that long ago, where they came out and said they made advancements. And this was no more than 4 weeks ago. So I've heard enough people talk about the fact that they don't think it's possible that it's coming that soon. But regardless, I think when China released DeepSeek, I think you got to be careful with a lot of the things being announced, that because the administration is in charge and trying to make sure that everyone's competing for who's ahead of each other, it is in our best interest as a country to say we've made advancements in quantum before China does so.
Yeah, that is a point. But the point being is when it arrives, it is not, they're going to hack Bitcoin. It's like we're about to create something, a thing that we don't even understand what it is.
Yeah.
So
I agree. So
amazing times. Jordie, as ever, fantastic conversation, my friend. Give me the YouTube channel just so people can find your stuff. And they can go down the Jordie rabbit hole.
Luckily, I have a unique name. Everything revolves around
Frisians. We're both Frisians.
There you go. See, I didn't know that you have a good portion. I'm guessing when you do your DNA thing, it shows up with a lot of Holland in it then, because
no, it's my mum is from Leeuwarden in Friesland. When I did, and my father's from India. My sister recently did her 23andMe, and it came back saying Frisian and Punjabi. We're like, really? Because Frisians are Frisians, and they've been there forever doing the same Frisian thing. And
exactly,
I had no other blood. Punjabi, Frisian, that was it.
So you were more than me, but that was the thing I said, because my mother's family was from all over. But so when you look at it, it's like 1%, 1%, 1%, 44%, because like you said, it's a tiny little island where it's almost aboriginal in terms of no one leaves. They've all been there the whole time. And so you end up in the same way. People can find me if they just look up Jordi Visser, if they go to my Twitter feed, if they go to my YouTube, if they go to my Substack, if they go to my LinkedIn, they can all find me. It's the easiest way because I have so many different handles. So don't worry about it.
Perfect. Jordie, good to see you, my friend. And we'll talk again soon, I'm sure.
Enjoyed it, Raoul. Thanks. Have a great one.
You see, as ever, the conversation with Jordie goes where it goes, and it's always super interesting. I just like the fact that we can start throwing out ideas about the world, and we've been building this conversation. I urge you to go back to watch the other conversation I've had with Jordie, because these are all building on each other, because we're starting to get an understanding of how each other's brain works, and we're starting to build theoretical frameworks in our head of which we have a commonality of understanding. And those are the joys of the conversations. The joys of this Journeyman series for me is building those mental frameworks, those mental building blocks to help us understand where the hell we're all going. And as I keep saying, I think we've got about 5 years before we get there and everything changes. And you need to prepare for that. You need to unfuck your future now to prepare for that 5 years' time by 2030 when everything gets really quite freaky. Anyway, good luck out there.
Yalla Habibi!
It's good to be here at the main blockchain event of this year.
You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. What more can you ask? It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. So we get all of that, all in one place. See you at Token 2049 in Dubai.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.